Hey folks, it is Shooter. Just trying to bring you guys up to speed here. Gonna go over a couple charts, sort of look at the Fandangos, the Mag 7, whatever name we're going to call it this week. At the end of the presentation, please review our disclosures. So let's start off with the SPY. So we really are pushing it here. I mean, we didn't get a lot of euphoria today after that 489. Count still says we're going to get a little back test to about 480. So I would suspect tune around Tuesday kind of thing. Maybe we roll over a little bit before the Fed and then come back in and put that 485 for the Fed. So I still think you're safe selling some 505 covered calls. Looking at the NASDAQ, I mean, we're really euphoric here. Count hasn't changed. So, we get that turnaround Tuesday. Maybe we put it on a lower candle and then we take off. But the upside keeps pushing a little bit here, especially, when I go look at the Magnificent Seven. But let me go through this stuff that I'm seeing, and I think you'll understand. Now, the Dow has joined the party again. Definitely some euphoric. Now, I would suspect that the Dow starts to lead if FOMC is positive, all right? I would think that we resumed that trend like we did before Martin Luther King, the holiday. All right. However, once we get up to about this 390 and we're still in that range, it's showing me a fairly decent back test, at least 40, 50 bucks, somewhere in that range. Now, the Russell's has flipped bullish temporarily, but it is still a primary wave 2. Okay. So we haven't put it in this B. So this could become an impulse wave and go up here and put in a high around 210 and then roll over. It's sort of a mess. You can tell that we had some expansion and breadth today, but there's nothing when you look at the market, dollar isn't giving us any tailwind, etc. Now, bonds, the Fed reduced the number of bonds at auction, and the markets like that and TLT like. Now, last week I had a clean count to the upside, and I kept the count to the lower side because I was thinking it was the FOMO of the Fed pivot again, which is what it looks like to me here. So I think this little pop that we got up was the bonds, but I think once everybody that wears off, everybody realizes that actually the amount of money we need to fund the national debt has increased, has not decreased. So the problem has changed. So why does everybody think the government's going to need to lower the amount of money they need to raise when the tax base hasn't increased either? It's still decreasing. So we still have that same quagmire. So this is sort of like a euphoric moment. So I would say there's a good chance this reverses. Now, I went in and I talked about buying some common shares here and then turning around and selling, maybe some April, May 105 covered calls. So you're basically doing some common shares here at 95. Reason is because $5 down to 89, which is where my number was. So my number was down here right at support. So, I think there's two scenarios. I wrote a text on it or in chat, and I think there's two scenarios. Fed does nothing, doesn't taper. Okay. So I think the second side is they taper, right? They speak of a pivot or a rate cut instead of a date day or a timeline. Okay, or they cut. Okay, any of those three occur, we're heading back on this path. We're back here, so that's going to go straight up, right? Just like the count suggests it's going to do right now. So the question is, do we want to put that risk on? I don't think there's a lot of risk in selling, because if you pay 95 a share for it, right? You sell 105s, you got $10. So you're going to earn $10. So what's that? 9% or 7% or whatever? Sorry, my math's not that quick in my head. Then whatever you earned in the premium for selling the covered call. And realize they're going to get a premium right now because I can see why the market would think this is going to keep running. So it sort of makes sense to me. The other thing you could do, you could come in and buy some in-the-money calls. And obviously, if anybody else has any other ideas, throw it in chat because I'd love to hear them. That's when I look at things like, I think in boxes. Why? So the $90 calls you're paying a premium for, but they're in the money. So if we go down to $89, they're still going to be worth about 60 or 70% of what you paid for them now. They're not going to get totally debased. Whereas if you come in and your whole position's $100 calls, you're going to be toast if we go the other direction. So what I would do is a blend about 80% $90 calls, and then jump way out to January 25, $100 calls. Go way out, just put a little piece on. And whatever your risk threshold is. I think that sort of gets you a position in the right direction if we go there. I like the latter or the first one first. In other words, selling the covered calls because it insulates you against a downturn. So, if you pay 95 and you're holding common shares, all you have to do is plan on buying some more around 89. I wouldn't necessarily, or 90, and then sell some more covered calls a little further up the ladder, and you're still earning that 15 to 20% premium on it, which isn't a bad yield, but you have a position, and then you can decide whether you want to hold them or sell the covered call, whatever the circumstances are. I think gives you a little more options. So that's my thought on TLT. Let's jump over to XLU. Now, get a slight bit again. We got the second candle, but it's sort of waning, so no flight to safety. All right, I want to look at emerging markets. Now, we hit the 50-day and back tested a little bit, which is reasonable. It's shallow. I think we come back out of that. But realize when U.S. indices are moving and China tends to wane a little bit. So, maybe when U.S. indices turn over, we'll start back on that upward trajectory. But again, I think that we are headed back into that trend. And also, too, China has directly made comments today about stopping short selling. So that should be positive for equities as well there. All right, let's look at the SOX, okay, very bullish, uber bullish. We pushed all the way up to 699 on our count. We got some room to run, okay? XLK, really haven't pushed too much, but pushed a little bit, 217. More room to run. XLF, not quite as much room, but still, we're going to head up towards about 42. Now, XLV is a little shallower, hasn't really caught on board as much as I would like it to. We're basically back above the 23.6 fib, which just is confirming where we are. Now, I wanted to jump over and look at the Magnificent Seven, starting off with Nvidia. And I'm just going to come out and say it like I was totally wrong on this. I figured we'd top out. I didn't think there was that much euphoria there. I should have seen it, though, but I didn't. I just, sometimes that bias just gets in front of my eyes and I'm blind. And this Nvidia is a great example. But looking what we're doing here on the weekly, we're confirming. We've got a little bit of a higher high here. So in RSI, it's not glaring, right? Just a tad bit. Notice how it's glaring. So this is the new confirmed high. So of course, what are we looking for? At least one more confirmed high. We've got it. Sometimes I just don't see things. Maybe I didn't see it. I don't know. Maybe the bias was that we ramped too much. We couldn't do it again. And, here again, the pattern was here. Somebody should have just slapped me in the face because it's there. Okay. Now, the problem what we have now is that we don't have much upside after this intermediate wave. So we're right there, 636. So if it pushes, now realize how long is 2 here, right? So 3, it could still push up to 700. There's no reason it couldn't push to 700. Then this whole leg pushes up a little bit more. So it could have a little more euphoria. But I really don't get interested in this again until we're back down on that wave 4 around 530, 525. Then I might get a little interested, but still, to me, it's a little expensive. I would rather, AKA, go after something like Amazon, okay? When we get a back test. Again, this is pushing a little bit, maybe 168. And, here again, both Nvidia and Amazon, I was expecting lower counts on Amazon. At least that's what the software was telling me. And, I didn't see this one either. So when I spoke in late December, where I thought that once we started the new year, we would resume the Magnificent Seven leading us. And that's where we are. Literally, that's where we are. So, I see no reason for these to slow down. So I would suspect that we see all-time highs, and this 4 may disappear, and this may get very euphoric. So I would not be surprised if this pushes back above that 190 or 187 or whatever the high was as well. And, jumping over and look at Google, definitely the leader. My bias was there. If you have not closed your cash secured puts, I would sell them here going into FOMC and then structure yourself from there after the fact. I would hang on to the calls if you guys still have them, or of course, and hang on to your common shares because this has the cleanest count to the upside. Realize this is going to come over and be like here. So, that's going to be April, June, July. Up at 180, as far as Google's concerned. All right, now looking at Microsoft, little upside. Now I put a shout out in Friday, about picking up some 420 calls. They're working, but they're not working as well as Meta's 420 hours. Meta's definitely. I suspect this 3 is going to extend, all right? a little more than that. I wouldn't be surprised if this primary wave 3 gets pushed up there too, because that's pretty euphoric. That's pretty aggressive. Pretty aggressive. If they beat, we're up at 450. I really think. I think we get up. So those 420s will pay. And I didn't even think about the 420 thing until after the fact. I was just like, man, that's cool. Both of them, 420 Microsoft calls, 420 Meta calls. I'm like, hey, I don't know, something was on my mind. All right, Apple. Maybe 186. So Apple is sort of the unfavorite child right now. Now let's look at Tesla. Now Tesla came back today. I mean, I was expecting continuation with this. That's a little too aggressive. Aggressive, and one more push lower. We didn't get it. So this is now a freaking leading diagonal. God, and I hate those. However, this should be a nice push. This might actually get us back up to 230 where we can short it again and then go down to 177. So I don't think the downtrend changes, because here goes, just like the fact that the bonds were cut as far as what they were selling. The problem that Tesla faces right now is the declining profit percentage based on their sale. And at this current rate, they don't deserve the 150 valuation. Even though a number of people have said, hey, 150 is a good price. Honestly, maybe 125 is a good price for me down here around these lows. Back test that, we confirmed we got no divergent low down here. So, I would be perfectly fine if this pushes back up here. It gives me a lower high, then I can short it again. But I think there's going to be a little volatility in here. Of course, I'm going to be all over that like white is on rice. So that's the way it is. So we're looking for that minor wave of 232 now, then shallower back test. And then, we're going to come down to the lower side. And actually, let me come in. I got to do the 4-3. I'm missing no, I've got it in there. So maybe 177 after we put in that too. So, this is going to give us a nice, honestly, if you want to chase it long, you could here. I think there's too much of a risk. It rolls back over though. That's my thought. I would rather get up here and test the top side of this band, right here where this resistance line is, get some rejection and put in a higher low, and then take a shot at the long for those 232s. Because it'll give you a run. Don't worry. One thing Tesla likes to do is it likes to push and give it back. Push, give it back. Push, give it back. Push, give it back. Gives you plenty of chances. That's for sure. All right, I wanted to jump and look at Micron. Now, uber bullish too. We're just, we could really run here. Count's telling me 103 for our primary wave. So the next one is 92. Then we get this back test on this minor wave for around 59. And then, bam, or 89. Yes, 89. And then we head towards that 103. So nice run. One thing I love, out of all of the options available on stocks, I like Micron the best because of how the monthly and the weeklies are broken up as far as their strike. So it gives you clean strike prices, and you can really see the volume where your strikes are. And it's been a very profitable vehicle for me over the years. And I probably need to start trading it regularly like I do Tesla again, because, it looks to me like our ranges, especially when we get up to this 3, it's going to get back into the kind of ranges here for a little while when we build out this flat before we get that next launching pad. And that's my thought on Micron. CAT is very bullish. This implies a total China recovery and a U.S. recovery, and we're booming, okay? Very bullish. So I'm bullish. I'm uberish bull. Uberbush. So that's where I think we're heading. So, all right. Well, thanks for joining me, folks. Great trading. Until next time.